The following podcast by Fusion Family Wealth, LLC, Fusion, is intended for general information purposes only. No portion of the podcast serves as the receipt of or as a substitute for personalized investment advice from Fusion or any other investment professional of your choosing. Please see additional important disclosure at the end of this podcast. A copy of Fusion's current written disclosure brochure discussing our advisory services and fees is available upon request or at www.fusionfamilywealth.com.
Hey, welcome to another episode of the Fix It Friday version of the Crazy Wealthy podcast. Thanks for joining us. Today I'm going to talk about something that deals with what I call the availability bias, and I'll describe that. It's when we put more emphasis on not the probability of an event occurring, but how available to our recent memory is an event like that today. And they're two different things. So, title of today's podcast is Flying, Driving, Investing, and Availability Bias.
Welcome to the Crazy Wealthy Podcast with your host, Jonathan Blau. Whether you're just starting out or are an experienced investor, join Jonathan as he seeks to illuminate and demystify the complexities of making consistently rational financial decisions under conditions of uncertainty. He'll chat with professionals from the advice world, entrepreneurs, executives, and more to share fresh perspectives on making sound decisions that maximize your wealth. And now, here's your host.
So I'm going to start off with a question. Would you rather fly across the country or drive? Most people feel safer driving. The statistics say they're wrong, really wrong, and investors make the exact same mistake. Most people are more afraid of flying than driving. When you're on a plane, you feel every bump. Turbulence gets our attention, and we're not in control. Someone else is flying the plane, and when things get shaky, it feels awfully dangerous. Yet statistically, flying is far safer than driving. Investing is actually very similar. The market's version of turbulence is what's called volatility, the up and down sharp movements around the long-term trend lines. We see headlines, watch account values fluctuate, and feel uncomfortable because it seems risky, especially given that we're not in control of what's going on with our portfolio at any given time. But here's the key. Volatility is uncomfortable. Inflation is dangerous. We must not conflate temporary discomfort with permanent danger. Volatility is temporary turbulence. Inflation is a slow leak in our financial plan. Many investors try to avoid the discomfort of market volatility by moving to things like cash, certificates of deposit, bonds, or other investments that feel safer. The problem is that while those choices may reduce the short-term bumps, they can increase the risk that inflation slowly erodes the purchasing power of our dollars over the long term. It's like choosing to drive across the country because flying makes you nervous. The option that feels safer may actually carry the greater long-term risk. Part of the reason we get this wrong is something psychologists call availability bias. We tend to overestimate risks that are vivid, memorable, and heavily reported. Plane crashes make national news. Millions of safe takeoffs and landings do not. Market crashes dominate headlines. Decades of market compounding and wealth creation rarely make those headlines. In reality, stock markets have produced positive returns far more often than negative returns, and the magnitude of the gains has historically far exceeded the magnitude of the losses over long periods of time. Yet investors focus on the rare crash rather than the far more common recovery and growth to new highs that follow. So what's the fix? Don't conflate discomfort with danger. Turbulence doesn't mean the plane is crashing. Market volatility doesn't mean your financial plan is failing. The real risk isn't the volatility that grabs your attention today. It's the inflation that quietly steals your purchasing power over decades. A portfolio heavily weighted toward ownership of great businesses has historically offered investors a far greater probability of preserving and growing purchasing power than one heavily weighted toward fixed dollar assets or cash equivalents. Just as flying often offers the highest probability of reaching a distant destination safely, owning great businesses has historically offered investors one of the highest probabilities of reaching distant financial goals. The goal isn't a smooth ride. It's arriving safely at your destination. In flying and in investing alike, the turbulence that gets our attention is often far less dangerous than the risks we rarely notice. I hope you enjoyed this version of today's Fix It Friday. You can find us on the FusionFamilyWealth.com website, crazywealthypodcast.com, and all of your favorite podcast venues. Have a great weekend until next time.
Thank you for tuning in to another episode of the Crazy Wealthy Podcast. For more insights, resources, and to sign up for our newsletter, visit crazywealthypodcast.com. Until then, stay crazy wealthy.
The previous podcast by Fusion Family Wealth, LLC, Fusion, was intended for general information purposes only. No portion of the podcast serves as the receipt of or as a substitute for personalized investment advice from Fusion or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy, or any non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation. Neither Fusion's investment advisor registration status, nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Fusion is engaged or continues to be engaged to provide investment advisory services. Fusion is neither a law firm nor accounting firm, and no portion of its services should be construed as legal or accounting advice. No portion of the video content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Fusion is engaged or continues to be engaged to provide investment advisory services. A copy of Fusion's current written disclosure brochure discussing our advisory services and fees is available upon request or at www.fusionfamilywealth.com.